Thursday, October 20th, 2022, Monaco 64, home of alternative economics and contrarian views. Today, we're going to look at one of my favorite bankers, actually central bankers for that matter. And you might think, that's weird. Mario's got a favorite central banker. Well, it's John Exter, and you'll see why. John Exter is old school. Of course, he passed away in 2010. But I think we're approaching John Exter's moment of truth. And I will explain what that means later on. And there's an old saying in the alternative economic sphere in the last few years. That old saying is inflate or die. I think we're really near that point. And we're going to look at John Exter, and we're going to look at the U.S. Treasury Market. Yeah, the UK gilt market was center stage until a few weeks ago. It was melting down. I warned a few months ago. I said that if we broke the 2.7% yield level in the 10-year, we could see things accelerate very quickly. In a bad way, of course, for everything. And I think we're fast approaching that kind of level in the U.S. Treasury market. So before I start, I'd like to talk a little bit about John Exter and how I came to know about John Exter. First of all, I found out about John Exter even before the '08 crisis, even before he died in 2006. I'm sorry, I said he died in 2010. He died in 2006. And a lot of you know that I got involved in gold. I bought my first gold coins in 2002. I had already been reading about the Austrian School of Economics. I'd been following the Mises.org website. I'd been following a lot of libertarian free market blogs. And I probably heard about John Exter like that. And I had a very good friend at work called Aaron, who I got involved in gold. And he really loved the Austrian school as well. And we always spoke about John Exter. And I remember well that he was still alive. And we tried to get in contact with him, I think. But it was tough. He was in his 90s already. I think he lived in New York. But this is what Wikipedia says about John Exter. Born September 17th, 1910, died February 28th, 2006, was an American economist, member of the Board of Governors of the United States Federal Reserve System, and founder of the Central Bank of Sri Lanka. He's also known for creating Exter's Pyramid. So let's go through his life and career a little bit. This is another interesting thing. Exter was born in 1910 and graduated from the College of Worcester. Why is that interesting? Well, because I had a very good client in New York. He was at a big bank. I won't say the name. Very nice guy. And guess what? He went to the College of Worcester. So I remember speaking to that client about John Exter. The fact that he came up with this pyramid and he worked for the New York Fed. He then went on to the Fletcher School of Law and Diplomacy, and in 1939 to Harvard University for graduate work in economics because of his interest in understanding the causes of the Great Depression. After a stint at MIT during World War II, Exter joined the Board of Governors of the Federal Reserve System as an economist. In 1948, he served first as advisor to the Secretary of Finance of the Philippines and then to the Minister of Finance of Ceylon, now Sri Lanka, on the establishment of central banks. Between 1950 and 1953, Exter was the founder governor of the Central Bank of Ceylon. In 1953, he became a division chief for the Middle East and International Bank for Reconstruction and Development. In 1954, the New York Federal Reserve Bank appointed him vice president in charge of international banking and precious metals operation. So there you go. He was a gold bug. John Exter, I've seen stories that I think he spoke about it in interviews while he was still alive, how he bought sovereigns in the 60s and early 70s when there is the prohibition for gold, because sovereigns like pre-1933 gold was allowed. Well, another thing that I would say is weird, that I respect this guy, is because he was a member of the Council on Foreign Relations, the Committee for Monetary Research and Education, and the Mont Pelerin Society, and the Pilgrims of the United States. He and his wife Marion had 4 children, so very elite guy. But I think he knew the truth about the whole system. He knew that the current system, which we have, and I'm going to put a link in the description. You must read this. This is from 1972, written by John Exter. It says, "Currencies today are IOU nothings." And I'm just going to go through the introduction here. And this is right after Nixon closed the gold window. And the other interesting point about Exter, he advised Paul Volcker. Paul Volcker was Undersecretary for International Affairs for the U.S. Treasury when they decided to close the gold window. John Exter actually advised him because he knew Paul Volcker. And John Exter actually told Paul Volcker that there's only 3 things the U.S. could do to solve the problem of the loss of gold by the U.S. Treasury at the time. He said the first one, some more of a normal thing that we could do, is raise interest rates. Well, politicians don't want to raise rates, President Nixon. The second one was quite extreme as well, was to revalue the price of gold in dollars, so do a devaluation. And the third, more nuclear option, which actually John Exter suggested, was to basically default, close the gold window. So unfortunately, they chose the third. And this is what he said in 1972. So let's quickly go through these first few paragraphs. I think it will help you understand what he meant by IOU nothing currencies. Now that the international monetary system we have so long known has broken down and the world is going through monetary reform for a new one, it is time to consider some fundamentals. What is money anyway? So first, it is a means of payment or medium of exchange. I prefer the first phrase. It is simpler. We all use money to pay our bills, to buy goods and services. We also accept money when we sell. Second, it is a standard of value. We quote values of goods and services in terms of it. The resulting ratios are prices. Third, it is a store of value. We hope to avoid loss by holding it. Money holds its value if it is scarce and remains scarce. Scarcity is the keystone of store value money. Today, no money in the world fully performs all 3 services. National currencies are being used as means of payment and standard of value money, but not in this inflationary age is an assured store of value money. In fact, a foremost concern to voters and politicians everywhere is that so many currencies are so rapidly losing their value in terms of commodities and services. Commodities like gold and silver, which are being used as store of value money, are not being used as either means of payment or standard of value money. Thus, the world we have so long known, in which most currencies are redeemable at a fixed price in the store of value money like gold, is in disarray. People are confused and wondering what money they can trust. Sensing the instability of the system as a whole, they turn day to day from means of payment money to another in the foreign exchange markets. Sounds familiar. and much more gradually to store value money like gold in the London and Zurich gold market. So I'm going to stop right here. Highly recommend you read the whole thing. You'll see what he says about SDRs. It's not good because they had already been created then. So back to John Exter's pyramid. Well, basically he said that under this fiat currency system, eventually the huge credit bubble and currency bubble that would have been created would have collapsed onto itself. And why? Well, I'm sure he knew why, because a debt-based system is unsustainable. We know historically that fiat currencies always collapse because we get to a point where there's too much debt and things can't keep going. People are up to here in debt. They can't take on new debt. And recently there was some data out of the U.S. Treasury that the U.S. Treasury paid off $15 trillion in debt in the last fiscal year. And you might think, what are you talking about? The debt is growing. Yes, but 15 trillion came due. And how did they pay that? Well, they issued more debt, more treasuries. So that's how crazy the system is. But John Exter said that eventually all the liquidity, all the credit, the full faith and credit, so to speak, that backs the system was going to be flushed down. So that's the die part of the system. And that's, we've seen that in 2008, it was going to happen, but they didn't allow it. It's inflate or die, right? But I feel right now that we are in the very near dying for the system. And you can see the different asset classes. This has been adapted for more modern asset classes. I don't think John Exter put derivatives and unfunded government liabilities, but these are the riskiest, less liquid assets at the top of the pyramid, and then you get to towards the bottom, and we are in government bonds and treasury bills. Above that, we are in listed stocks. And this year being the worst year for the 60-40 portfolio in 100 years, everything is down this year. It makes sense that we could be seeing a flush down of this Exter's pyramid. And you might think, how come gold hasn't done well? Well, gold and silver, the kind of that we look at, of course, the spot price or the futures price, those are not real gold and silver physical. They're derivatives. And I'm sure John Exter, at the bottom of the pyramid, he put gold. He could have put silver as well. But those are physical. Maybe that's why the premiums are so high. And maybe that's why big money is really accumulating physical gold and silver. And I like to say that I interviewed Andy Schectman recently, and I'm going to post that interview very soon, probably later on today. And Andy Schectman talks about this, and I highly recommend you watch that. So, inflate or die. Will the Fed let the liquidity evaporate and allow gold to reign supreme? Who knows? I don't have access to the FOMC. I'm not a fly on the wall of those meetings either. But even if they don't allow for the die part to take place, they could reinflate. They could try to keep this going. And if they do, you still want to have gold. But if they don't, it's the only thing that will save you financially and monetarily, in my opinion, having physical gold and silver. What about mining stocks? I think eventually they will perform well because people will realize, well, these companies produce the only thing that's left. And what about the U.S. Treasury market? As I spoke earlier, that everyone up until recently was focused on the UK government bond market, the gilts that melted down. I remember telling you, maybe you don't, but I remember telling you that if we broke 2.7, on the gilt yield. And why 2.7? Well, because it was a key historical level, looking at the long-term chart, that we could see yields accelerate very sharply, and they did. They doubled. They went to like 4.75, over 4.5 in a matter of weeks. And I'm seeing the same kind of scenario now in the Treasury market. And we've been told as well by even Janet Yellen that there's problems in the Treasury market, illiquidity. So I think the key level here, and we're fast approaching, is going to be 4.25. That was the high back in May of 2008, just before the great collapse of Lehman and what would have been the great collapse of Wall Street hadn't they been bailed out. And after that, it would be 5.25. And then we're getting to levels that we haven't seen in the 10-year yield since the beginning of the century. And back then, I think debt to GDP was just over 50%. Debt to GDP now is almost 130%. So you can see why this is a problem. And the other thing a lot of people don't realize is that treasuries and other government bonds are considered risk-free rate of return. So what does that mean? What's the implication of that? Well, a lot of speculation on Wall Street and even investment strategies by pension funds, hedge funds, traders. They're leveraged with the use of treasuries, because a lot of these people, they hold treasuries because they think it's safe to have treasuries, and they park them with their broker or investment bank to use as collateral for speculating in the derivatives market. And of course, that's what led to the almost vaporization of the UK defined benefit pension system, right? And this could happen in treasuries, because if you're using something as collateral for speculation, but that thing that you're using is really unstable and is not risk-free anymore, the whole edifice of derivatives could collapse. And derivatives, we know that their notional amount are north of 1,000 trillion or a quadrillion, and that's why that Exter's pyramid is so interesting, and we could be seeing the system get flushed down. So that's all I have to say right now. And I can't stop reiterating how important it is to have a little bit of the tip of Exter's pyramid. Well, that is, of course, a little bit of physical gold and silver, because it's all going to be about counterparty risk if we see the die part instead of the inflate part. So I think you're hedged very well. Even if they reinflate, if they pivot, you'll be fine with physical gold and silver. If they don't, I think you'll be fine too. So with that, let's quickly look at where the markets are this morning. It's almost 8:30 a.m. London time. We've got spot gold at 16.30. That's up about $1. High's been 35, low 22. Silver is virtually unchanged here at 18.45. High's been 18.58, low 21. To the stock market, the Dow future is down 44 points. The NASDAQ is down 100 points. And the S&P 500 is down 20 points. The FTSE is down 20 points, and the Euro Stoxx 50 is down 11. To the currencies, sterling is unchanged, 112.20. So is the euro, 97.80. Dollar yen is knocking on the door of 150. Guess what the high is overnight? 149.99, and right now we're right there. So I feel sorry for Japanese consumers because their currency has been trashed. The dollar is up 0.2 versus the Swiss franc. It's trading around par, dollar Swiss. And the dollar is down a quarter of a percent, just below 725 versus the yuan. The dollar is up slightly versus the ruble, just below 62. So ruble fairly steady. And to the other currencies here, Aussie dollar is unchanged, 62.64. The dollar is unchanged versus the Canadian dollar, and the Kiwi dollar is down a quarter of a percent at 56.55. To the general commodities, WTI crude is up 1.5%, 85.80. Brent crude is up 1% at 92.12. High-grade copper is up 1% at 334. U.S. nat gas is up 1.8%, just below 6. And to finish off, let's quickly look at the U.S. Treasury market. And we won't look at the gilt market today. I know it's still under pressure, but I would say now the only market we need to look at in terms of government bonds is the U.S. Treasury market. So right now, we're very close to that 4.25% level in the 10-year. We're up another 4 basis points. I think yesterday morning, we were up 6 basis points at 406, and now we're at 417. We're right near the highs in terms of yields. So let's keep an eye on the U.S. Treasury market. I think that's the most important indicator to keep an eye on. I'm going to put a link in the description to where you can keep track of U.S. Treasury yields. And as I said, they're not just important for the bond market, they're important for the whole system because they're supposedly the risk-free assets, and the whole financial system uses them, uses these treasuries as collateral. And if people lose complete confidence in the collateral, the whole system will be under pressure. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And with that, I wish you all a great rest of the day. Take care. Bye.